All right, let's just dive right into this explainer and absolutely shatter the myth that you need thousands of dollars to start building serious wealth. If you've ever looked at your bank account and felt like, man, I am miles behind where I should be, well, you're in the right place. Today, we're breaking down this incredible strategy from Smart Sense Lab, and it's literally transforming how we look at money. We're gonna look closely at the math, the psychology, and the super simple habits that separate folks who just scrape by from those who actually build massive, life-changing wealth.
You know, the anxiety of not having enough money stops most of us from even trying to invest. We tell ourselves, hey, I need a huge windfall or a massive inheritance, or I gotta win the lottery to finally get ahead. But what if a tiny monthly habit could totally secure your future? What if I told you that investing just $100 a month could turn into thousands upon thousands of dollars? A lot of people think wealth building is just this exclusive club for the rich, but no way, that is simply not true. It's really just a game of consistency, and we're gonna look at the exact numbers today to prove it to you.
Okay, so check out this staggering mathematical reality. We're talking about a portfolio sitting at $125,432, fueled entirely by a modest $100 monthly contribution. When you look closely at the data, the total out-of-pocket contributions were only $24,000 over time, but the growth, an absolutely incredible $101,432 in pure gains. That is a massive 423% increase. This isn't some financial fantasy. This is exactly what happens when you apply a very specific system. So we're going to reverse engineer exactly how to pull this off using the 4-step Smart Sense Lab framework. Step 1, start small. Step 2, let time work. Step 3, understand compounding. And step 4, look at the real numbers. All right, starting with step 1, start small. Investing just $100 every single month is the absolute core of this wealth generation engine. It's an amount that's actually achievable for a lot of people. Maybe it means just cutting out a few non-essentials here and there, you know? But listen, the key here isn't the size of the initial deposit. Not at all. The real key is what that $100 bill represents. It's a commitment. You're building a habit. And here's the crucial point. Putting in a small amount consistently is actually way more powerful than waiting around until you have a massive lump sum, like $1,000, to invest just once. Seriously, if you wait until you feel rich enough to drop a large amount, you're probably going to be waiting forever. But $100 added month after month, like clockwork, that creates this relentless momentum that a single one-off investment literally can't match. Consistency absolutely beats everything else. Which brings us to step 2, the power of time. Now, this right here is exactly where most people go wrong. They stop way too early. Because, well, money grows really slowly at first. For the first few months, or honestly even the first couple of years, it feels like you're just dumping cash into a basic savings account. Nothing spectacular is happening at all. And that creates doubt. You start thinking, is this actually working? That doubt is exactly why most people just throw in the towel right before the growth curve spikes upward. They abandon the whole system before time can even work its magic. And that leads right into step 3, understanding compounding. Compounding is the absolute magic behind all of this. It's effectively your money making its own money over and over again. Think of it like a snowball rolling down a really long hill. At first, it's just a little handful of snow, but as it rolls, it packs on more snow. And the larger it gets, the more surface area it has to grab even more snow at an even faster rate. Over time, your initial $100 earns a return. And then the next year, you're earning returns not just on your deposits, but on the returns those deposits already made. It just accelerates. Let's look at the actual proof with step 4, the mathematical results. Following this timeline, we can really bridge the gap from your very first deposit all the way to that massive exponential growth we see at the 10+ year mark. So year 1, as we talked about, starts pretty slow. By year 5, okay, you're seeing steady, noticeable growth. The curve is definitely starting to bend upwards. But man, it's at that 10+ year mark where the magic really happens. This is where that compounding snowball takes over entirely and the graph just shoots up faster and faster. Let's ground this in reality for a second. By the end of just year 1, your $100 monthly habit means you already have around $1,200 invested and working for you. Sure, it's a small foundation, but it is a critical baseline. No, you haven't made $1 million yet, but you've successfully built the habit. You've planted the seed, and most importantly, you've pushed past the exact point where most people give up. So the ultimate takeaway here, the real secret to wealth, isn't trying to guess when to buy and sell. It's definitely not about timing the market to try and catch the perfect low or the perfect high. It's simply keeping your money in the market as long as humanly possible. Time in the market is what allows that compounding snowball to roll completely uninterrupted. The longer it stays in, the bigger the returns on your returns are going to get. And that brings us to a super vital bonus tip straight from the Smart Sense Lab framework. You absolutely must stay consistent even when the market goes down. Look, when you see a dip, human nature screams at you to panic and pull all your money out. You have to ignore that voice. You must keep investing, because continuing to add your $100 a month during a downturn, that just means you're buying in at a lower price. Riding right through that dip all the way to the eventual recovery is how massive, life-changing wealth is truly secured. As the Smart Sense Lab reminds us, simple money strategies that actually work rely on 3 unbreakable rules. Start small, stay consistent, and let time do the work. It's not flashy, it doesn't happen overnight, but the math is undeniable, and the visual proof is literally right there in the growth curves. So with the math fully proven, the psychology of compounding explained, and the path forward completely clear, I want to leave you with this final thought to kickstart your own wealth engine. If a staggering $125,000 portfolio fundamentally starts with just a single $100 bill and a firm decision to stay the course, what is realistically stopping you from beginning your timeline today?